middleman that essentially acts like a mafia. So what we're saying is, I'm going to remove that mafia from around your neck. And you're going to, it's basically...
What is that mafia you're referring to?
That mafia is the for-profit health insurance company. So they have to take their cut as the middleman between you and your doctor. Okay? If we just remove that, have the government at no profit margin be the single insurer, that's what a single payer means, they're the single insurer, then we actually end up saving $5 trillion over the course of 10 years. And that's not Kyle Kulinski talking. That's a detailed study from the University of Massachusetts Amherst.
Now...
talking.
That's a liberal fucking place.
In today's video, Kyle Kulinski absolutely destroys Joe Rogan in a heated debate about Medicare. Joe came in with the usual skepticism, worrying about costs, government efficiency, and the classic, but who's gonna pay for it? But Kyle brought the fire. In just a few minutes, he broke down the entire argument with clarity, facts, and zero BS. He laid it out plain. We're already spending more per capita on healthcare than countries with universal systems, and getting worse outcomes. People are going bankrupt over basic care, dying because they can't afford insulin, and we still have tens of millions uninsured. Kyle shut down the myth that Medicare for all is some radical idea and reminded us it's actually the global standard. So let's dive in and watch how Kyle Kulinski shuts down Joe Rogan in this heated debate.
So what do you do when you have all these insurance companies? Like, what happens to those insurance companies? What happens to all those jobs? What happens to all that money?
The insurance companies go away.
Go away. I mean,
they go away.
Businesses go under. So you kill those businesses.
If I say you're not allowed to cut your lawn, okay, unless, let's say the guy wants to charge you $100.
Right.
I say, no, Joe, I'm going to be the one who pays the person who cuts your lawn. You have to give me $200.
Okay.
So if somebody came along and said, no, whoa. Hey, middleman guy, we're going to get rid of you. And Joe, you want to cut your lawn? Give that guy $100 and you're all set. Wouldn't you say, well, that makes sense. The middleman guy, he can piss off. Because that's the way I look at it. The reality is when people argue for choice in health insurance, look at it like this. Would you say, hey, man, don't take away my choice when it comes to picking my firefighter? People are like, what do you mean? No, the way it works is there's a fire and you get help. End of discussion. They will come. You don't say, whoa, I want to pick my fire department. Well, this is the same thing with healthcare. The idea, you're going to be able to pick your doctor. That's perfectly fine.
Okay.
But the idea of you'll have your choice between insurance companies, that's like saying, pick which, do you want the Irish mafia ripping you off or the Italian mafia ripping you off or the Jewish mafia ripping you off? Go ahead. I'm giving you choice.
Right.
In some areas, the idea of choice is fundamentally absurd. It's like saying, well, let's shut off the road system. Instead of being public, let's have it privately run, and you could make a left on that road, make a left on that road, or make a right on that road. Don't take away my choice of road. I want to pay for that one or that one or that one. No, it's all there. It's all free at the point of service. And this is the whole idea of having a public utility. There's the whole idea of having something that's off the table in a civilized society.
Right.
And again, what the studies show is it actually saves money. So the real question people should be asking is, how can we afford to keep having the system that we have right now? Because we pay more than the rest of the developed world, and we have 30 to 45,000 Americans that die every year because they don't have access to basic health care, and we have 500,000 people who go bankrupt as a result of medical bills.
Now, Joe, as usual, played the curious skeptic. He wasn't aggressive, but he definitely leaned into that typical how are we gonna pay for it line like many MAGA-adjacent voices do. But Kyle, he absolutely owned the moment. He broke it down in plain language. We already spend more on our current healthcare system than we would under Medicare for all. That's not an opinion, it's backed by data from places like the University of Massachusetts Amherst and other health economists across the board. And Kyle made a great analogy, comparing the private insurance system to a greedy middleman mafia. Right now, private insurers sit between you and your doctor, skimming profit off the top while doing absolutely nothing to improve your care. Kyle's point, take them out of the equation, let the government act as the single non-profit insurer, and boom, you save trillions over a decade while covering everyone. That's not just compassionate, it's efficient. He also crushed the whole choice talking point. People think they're choosing between plans, but what they're really choosing is which insurance company will deny your claim this year. Kyle compared it to which mafia shakes you down. Spot on. And his point about firefighters, nailed it. You don't shop around for fire protection, you just get it. Healthcare should work the same way. Universal, guaranteed, and free at the point of service.
So what you're saying is that it would abolish insurance companies essentially?
So there is one caveat to that, and that caveat is what's called supplemental health insurance. So what that means is if there's something that Joe Rogan likes that's a medical procedure that isn't scientifically proven yet, but it's still something that you like, there would be private health insurance companies that sell you supplemental insurance, which means on top of everything that you already have through Medicare for All.
So if you were getting like stem cell therapy or something like that.
Well, in an ideal Medicare for All system, and Bernie, believe me, has gone so far above and beyond any criticism. I mean, his thing is airtight. It gives dental, it gives vision, it gets everything. I wouldn't be surprised if under that Medicare for All bill, the stem cells thing is covered. But let's say something like homeopathy, which is like the
Horseshit.
Horseshit, total horseshit.
You want to cover that by insurance?
No, Medicare for All would not cover that because it's so speculative.
So
and it's
private horseshit insurance?
Private horseshit insurance, or plastic surgery, things of that nature. But that's an important point because
is that real? They have private surgery or private insurance for plastic surgery?
No. I'm saying it would be theoretically legal for it under a Medicare for All system because it's supplemental.
How could you have insurance for plastic surgery? Like, I decided my ears are too big.
So maybe the market wouldn't be there, but it would be legally possible is the point. So it doesn't fully ban private insurance, but it does bans what's called duplicative care. So you can't say, hey, I'm an insurance company, I'm going to come in and offer you something that's already covered in full by the single payer system. And the reason why that's there is we don't want you getting ripped off by some charlatan.
I see what you're saying, but it would essentially gut the health insurance industry.
It would make it so that you no longer have health insurance company CEOs making tens of millions of dollars off the backs of people while people die because they can't get health insurance. Yes, it would. And that's a good thing. That's a positive thing.
Now, Joe was curious about the role of insurance companies, and Kyle didn't hold back. Yes, Medicare for All would absolutely gut the private insurance industry, and that's not a downside, that's the point. Ending a system where CEOs make millions while regular people go bankrupt trying to afford insulin is a good thing. That's not radical, that's common sense. Plus, it's not just a theory. Countries like Canada, the UK, and France already have variations of the system. And guess what? They spend less per capita, their people live longer, and nobody goes bankrupt over a broken leg or cancer treatment. Kyle's message was simple. Healthcare isn't about maintaining profits, it's about keeping people alive. And when the government guarantees you everything you need, letting the private market play around with luxury add-ons is totally fine. But no one should die waiting for care because someone in a suit wants a third yacht.
It's a good thing for us, but as a sale, like to sell that.
Well, the thing is, we have this issue where we have like a status quo bias, where people think like, well, because it works how it works right now, therefore the idea of addressing it and changing it seems like so overwhelming that we just kind of default to how we have it now. But the problem is, we know as a matter of fact that the way we do it now is the most batshit crazy way you could possibly do it, because they research this stuff all the time. They study this stuff all the time. And every single time they look at it, the U.S. comes dead last in the developed world when it comes to healthcare. So there was a recent study from the Commonwealth Fund. They found that they studied 11 different countries. The U.S. is 11th out of 11 when it comes to healthcare. So every other country that does the single payer system, which we were talking about, and there's different versions of it. There's multi-payer, there's single payer, there's private funding there's public funding of private insurance, public funding of public insurance. But bottom line is, any other way you do it is better than the way we do it right now. Okay? And just to be clear, because some people say, well, what about Obamacare? What was Obamacare? Obamacare was originally a Heritage Foundation plan, which is a right-wing think tank. So that was basically Mitt Romney's healthcare bill, Newt Gingrich's healthcare bill. And the whole idea was we're going to force people to buy private insurance.
Right.
And I don't like that idea at all. I dislike that mess. I've been very critical of Obamacare. I think there's a good case to make that it was a step in the right direction because anything was better than the system that we had at the time. But I would say that was just a little step on the path to what we should have, which is a Medicare for all system, where healthcare is a right and not a privilege. We catch up to the rest of the developed world. And again, we should go above and beyond the rest of the world, because like in Canada, I don't think they have dental covered by it.
They don't.
But Bernie's bill does provide dental. So, I think that this is one of those issues where when it's fully explained to people, it's kind of a no-brainer, and you can get people to realize, like, no, the system is totally screwing you right now, and we can fix it.
Kyle called out America's status quo bias, this tendency to assume that just because something's familiar, it must be better or too complicated to change. But when it comes to healthcare, familiarity is literally killing people. Kyle backed it up with facts. According to the Commonwealth Fund, the US ranks dead last out of 11 high-income countries when it comes to overall healthcare performance. Not just once, consistently. And we're not talking about some obscure metric here. We're talking about access to care, equity, outcomes, administrative efficiency, the stuff that actually determines whether people live or die. We spend way more than any other country and we get worse results. He also brought up a great point about Obamacare. A lot of people forget or never knew that it was based on a plan from the Heritage Foundation, a conservative think tank. It was essentially the Republican alternative to single payer, and Obama adopted it as a compromise. It may have expanded coverage and helped people in the short term, but Kyle's right. It still forces people to buy private insurance and leaves the for-profit structure intact. Kyle's vision, backed by Bernie's plan, is way more ambitious and humane. Medicare for all, including dental, vision, and hearing, with no premiums, deductibles, or copays. That's beyond what even countries like Canada offer. And the best part, it actually saves money over time by cutting out private middlemen and simplifying the system. Pause. Are you getting tired of getting half the story from biased news sources? One outlet says one thing and another says the complete opposite. How are you supposed to know what's actually true? That's where ground news comes in. It lets you compare how different media outlets, left, right, and center, are covering the same story. So you can see the full picture instead of just the echo chamber. And here's the best part. Click the link in the description and get 40% off the Vantage tier, which gives you even deeper insights into media bias and political trends. Stay informed, think for yourself, and check out Ground News in the description down below.
Well, no. Listen, man, you don't understand. Listen, you don't understand. No, Jacob, this will work. You must try. Brother, there's a step. There's multiple steps. No, there isn't. The broker lets me open it for free. And they lose all their money. Oh, it's a scam. 90% fail. It's complete bullshit. Hey, what's going on, guys? Welcome to MenTFX. This is a super short, 40 minutes, but a super short video if you just kind of listen to it on the bus, listen to it on the way to work, listen to it in the car, listen to it on a workout. Doesn't really matter. Listen to it. Feel free to watch it visually as well. There's some stuff that goes on the little white screen here. But quite literally, this is one of the biggest psychological mistakes that I personally made when I first started out, that I've seen people make over and over and over again. And very likely, these 40 minutes are going to save you 2, 3, 4, 5 potential years of going in circles. And instead of going in circles, kind of defining a process for yourself that you can follow now. So enjoy. The more at peace you are with the things that are going on in your current life and in your environment will very, very heavily affect the things that you're doing. I want to talk to this point in regards to trading because in my own trading, in the trading of a lot of the members that I've worked with, the only time that they saw kind of a breakthrough or had experienced multiple payouts or had experienced their first 5-figure day, their first 6-figure day, their first $1.8 million in funding, or whatever it might be, right? Because all these milestones are milestones that I've seen members achieve. Every single one of these people had a similar condition and environment that allowed them to achieve it, right? So this is going to be very, very hard for a lot of people to hear because on one hand, many people that start getting involved in trading, even the person watching this potentially, right? A lot of people that first initially get involved in trading with the idea that it is going to be a faster climb up the mountain. It's going to be a faster gain of monetary value, right? So there's just this belief that, you know, if you want to think about life in a certain light, right? You have your current life. Here's your life, and you see at some level a mountain, right? So this is always going to be a starting point for anyone in the world. This is me right now comparing me to a future version. This is you right now comparing yourself to a future version. This is you comparing yourself to another like rich person, whatever it might be, right? There is always some form of belief that we have over some potentially much better life, better material goods, better monetary, better family, whatever it might be. There's always something that seems better, right? And the biggest problem with trading, at least from what I've seen, is that there is a very, very steadfast belief. There's a big belief in the trading space that basically the stairs, right? If you think about this as a staircase, are much easier to walk. So, you know, this little staircase here and walking up it is a lot easier if you find yourself trading, right? Because there's this belief that this simple action on the computer where you're just clicking the click of a mouse or typing in the things on a keyboard, you know, I'm doing work, right? The simple act of doing that can achieve ungodly amounts of gains, which is true, right? Trading, quite literally, if you think about it, fundamentally is if you have a system worked out, which is a very important caveat, but if you have a system worked out, simply the clicking of buttons on a mouse and the input of numbers into a keyboard can lead to ungodly numbers of wealth that you may have never considered before, right? So of course, you know, this transition looks like it's literally a few clicks away. So in the trading space, one thing that almost always happens is that many people getting started have this surface layer belief, or this bottom layer belief, that all they have to do is learn to click the few buttons in a row and they can achieve this, you know, very, very large reward for a lot less work than anything else would take, right? It would be very different if, you know, here's you again, boom, 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 you saw this, right? It'd be very different if you knew that this same monetary reward difference right here came from something like being a surgeon, right? So like being a very precise surgeon. Let's draw a little guy with a hat. There we go, like the surgeon hat, whatever, right? The belief would be very different, right? Because the staircase no longer looks like this, right? All of a sudden, you fully understand that the staircase looks a little bit something like this, and then there's twists and turns throughout the staircase, and you really got to make an effort at going through the staircase, right? Because there are now qualifications that are directly linked to getting to this level of financial success, wealth success, value creation, whatever you want to call it, right? It's a lot more clear what the process is going to look like. And the environment that you have to accept before doing it has to already be worked out, right? So like a lot of you that have ever tried to become this, or know anyone in the world that are surgeons or whatever, know that it is an unbelievable amount of work, right? You should basically know that it takes, you know, early schooling, 10, 20 years of early schooling, 4, 8 years of graduate degree, like 8 years more of graduate degree. So like there's already an assumed and seen and forced qualification to get to this level, right? So one of the main things that I've seen that has kind of stopped a lot of traders is that there's a failure to understand that qualification still exists, but it has to be set by yourself, right? So in the trading space, quite literally, this accessibility is there for everyone. This is the hard thing to understand. This accessibility in the trading space, if you want to think about this as trading, right, is for the most part theoretically accessible to anyone, right? Because there is no barrier and there is no qualification level that is set. In every other discipline in the world, every other job in the world, every other high earning income job in the world, with the exception of being a rug pulling scammer, crypto, whatever the fuck, like some of these people do, there are very clear qualifications, right? There are very clear qualifications that aren't just set by the person, but are set by society, by necessary blockades, right? So achieving this level of success has to come with the decision initially to go through, well, an already set process that is very hard, and to basically approach it from that environmental state. Right, so everything that you do to become a surgeon is kind of laid out. There's clear qualification. The qualification is, you can look it up. There's bullet points to it, and you cannot skip any of them. Right, you cannot skip. You know, if there are, let's say, 5 bullet points to becoming a surgeon, you cannot skip 3 of these bullet points and become a surgeon. They will, you know, the company you're going to try to work for, the hospital you're going to try to work for, whoever it is you're going to try to look for, are going to look at your resume or your experience and your past, and they're going to say, this does not, you will not be able to. You can't come out of high school, right? There we go. I graduated high school. Let's draw a little thing, all right, the little hat. I graduated out of high school, and then let's say the next step is like, I don't even know, what would the last step be? You wouldn't even be able to complete these other steps, right? You can't come in with one of these 5 done, and then skip to basically, I want to be surgeon now. You can't come in, so that's 1, 2, 3, 4, 5, 6. You can't come in with 2 out of 6 of these to a hospital, right? Imagine you come up to the hospital, hey guys, I just completed high school. Throughout that time, you know, and after that time, I didn't really do anything, and I want to be a surgeon, right? They're going to look at it and they're going to say, dude, you don't have the qualifications. There's no reason you should be doing this. It makes absolutely no sense. Get the fuck out of our office, right? And similarly, in trading, this is something that's very, very important to understand. So this is directly, so everything you're seeing right now is actually directly from the MentFX portal and the material where we kind of go step by step through all of this. But what I really want you to focus on is this right here. Are these 5 or 6, 7 kind of steps, right? So the problem with trading is that if you actually want to find profitability in trading and you want to think about the actual steps, even though the money is all accessible and the qualification can theoretically be earned in a second, right? Because remember, there is no blockade in between you and actually making $1 million tomorrow in trading technically, right? You could throw all your money in, you could do a gamble on it and make money. But on the other hand, there is no way that you can take a gamble like this in anything else in the world because, well, there's society, there's steps, there's schooling, there are things in the way that are going to stop you no matter what. That doesn't exist in trading, right? So the only one that can be capable of setting forward qualifications for trading in general is only going to be yourself. So what you're going to see is almost always, you're going to see an increased level of failure, let's say 90% of failure, right? Because what's happening is the 90% that are failing are simply failing to adhere to qualifications, right? So if you think about qualifications in regards to being a surgeon, you could also say how many people become surgeons after high school or after the next step after high school, right? Well, it's probably going to be 10% or less. So quite literally, the success rate of being a surgeon also becomes 90% a failure, right? Because in this specific situation, you're skipping like 5 or 6 parts of the steps and thinking that you can instantly achieve success. In trading, you don't have these steps laid out for you unless you choose to go through them. So the problem with trading is that without any qualification, people just 90% fail. But the thing I want you to focus on is where does that failure come from? And this is where I want to bring up something specific to the portal material with the team. And this is actually something that you can literally write down and follow for yourself. I'm going to kind of talk about it a little bit right now, but you know, we talk about this a ton more in the team. And that is that if you simply allowed yourself to follow this set of principles and go through them step by step, 1, 2, 3, 4, 5, 6, around 6, right? 1, 2, 3, 4, 5, 6. So if you simply did these 6 steps and you did these 6 steps consistently, you will have passed the qualifications necessary to achieve a certain level of success and reward in this space. And then over time, that becomes very, very likely, right? What this means is that initially you have to have the understanding that becoming a trader or becoming a surgeon quite literally carries a similar harder step than just, hey, I can fund an account. You know, I can fund that account with $100. I can flip that $100 into 10K because my favorite YouTuber or mentor told me I can. And here I am, I've achieved insane success and I'm funded and I'm doing amazing, right? This is not how trading functions or works in any capacity, right? So going from where you are now to here might look a lot easier from the trading perspective because there's no qualification, but it's in some cases infinitely harder because you are the person that must set those qualifications forward and set them up for yourself. So those qualifications, to give you them right now, are these right here, right? It quite literally goes system, proper risk understanding, case study, data collection, back test, forward test, and live execution. This is it. This is literally all it actually takes to find full profitability in trading. The problem is most never, ever choose to go through them. Okay, so what I have noticed, and even the person watching this might even notice this about themselves, is that quite literally, if you have found yourself failing evaluations with funding firms, if you found yourself starting an account, making some money, and then losing it all, starting an account, doing well on it, and then losing it all, if you found yourself blowing up accounts, making emotional mistakes, blah, 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 insert whatever problem you have, it stems directly from a lack of this exact process right here. Because this process isn't just a process for profitability, this process is the qualification. So each one of these steps is a qualification. Okay. I'm terrible at that's, you get it. Qualification, because I'm using a mouse to do this. These are the qualifications of a full-time profitable trader. Every single member and trader that I've ever worked with that has gotten payouts, gotten funded up to seven figures, 8 figures, had multiple payouts of 4, 5, 6 figures, every single one of them had done this process at a level that allowed them to have the qualification to actually achieve success, right? Quite literally, to put it simply, if you saw someone or if you needed to get surgery and you're in the surgeon's office and you know they've done this to become a surgeon, you trust that person with your life. Maybe not fully, but you basically trust that person to operate on you and do this, right? The same thing goes for trading. If you see someone here and they've achieved all this, you would trust them with your money. But if you're here and you simply see that, hey, maybe I can do, a gamble that can make me all this money, then you are better off buying a lottery ticket because you are skipping every portion of the qualification. You are the person that is coming to this person and saying, hey, operate on me. I trust you. Hopefully it works out. Even though they haven't undergone the process, gone through the steps, and have not received any of the qualification. So simply, remember this as you kind of move forward. It's society has set up a lot of qualifications for everything in the world, especially those things that operate at high income levels. Similarly, trading, which is something that can literally operate at an extremely high income level, has no qualifications that are set by anyone but yourself. You are the spokesperson of the qualifications. You are the decider of whether you are ready for something or not. So it's very, very important that you understand the steps that need to be taken or you lose entirely, right? So the steps that actually need to be taken are these right here. And these steps, all of them put together step by step, give you the qualification to be a full-time trader. Now, what I have noticed from working with over 10,000 people over the last 5 years, and that you heard that correctly, I've worked directly with over 10,000 independent people over the last 5 years. Not even exaggerating this number. Statistically, I have worked with 10,000 people, not through YouTube, through independent, real work with 10,000 people. The thing that I have seen that has caused the most failure when they were just kind of getting started and didn't know what the fuck they were doing wrong was that someone will learn a portion of a system. Let's say 40% of a system. The idea here is you can insert any system. I just learned that if there's a trend line and there's a break of the trend line, I can look for shorts. Or I just learned that if I have a clean area of resistance and price comes up to it, I should sell. Or if it breaks through it, I can be a buyer at it in the future, right? This is system, but 40% understanding. Or I have a trend set, and because I got a break of structure or a change of character, that means I can be a seller here and I'll make money. Or I learned that there are FVGs, imbalance areas that price comes and must come into clear liquidity, right? Those are just beginning aspects, simple understandings of systems. And what happens is someone learns something or hears something new and thinks, holy shit, the market has been flipped on its head. Because remember, guys, I've literally done all of this, okay? I've literally learned it all, understood it all, seen where problems lay, and basically worked towards an understanding that was repeatable, consistent, teachable, And I have seen people directly get real results as a result of it because they also follow these qualifications. Okay, but the problem that I see is someone might learn like 40% of a system, and then they'll skip understanding how risk works. So this is where somebody assumes that a 30% win rate means that you're a losing trader, and they just don't even think about it, or thinks that a 90% win rate means they're a winning trader. So they don't understand how risk works. They have over leverage risk, under leverage risk, improper risk, no proper understanding of how RR functions, right? So these are everything I just said. If you don't know what that means, you can look it up online or whatever. Or you can become part of the team where I literally go through this step by step to explain exactly how we think in these exact steps or have proper risk understanding. So, if you're not a part of the team, then join up. If you are, then you guys already know what I'm talking about. But very simply, right, if you don't have a proper risk understanding, okay, and you only have 40% of a system complete, and you have no case study, data collection, or backtest, and you move to a forward test, which is also known as live execution or trading on a funded account or whatever, what do you think the likelihood of your success rate is going to be, or of your potential to receive reward? Where do you think this 80 to 90% number comes from? Where do you truly think that this 90% failing rate, oh shit, where do you think this 90% failure rate actually comes from? Well, it simply stems from the exact same thing that you would see in any other industry, which is that you have a lack of qualification, but you don't have anyone stopping you. So you take your lack of qualification and you apply it to something realistic, and you wonder why you cannot operate or perform surgery at a high level without said qualification. Well, this is your answer, right? This is your answer that says, well, the reason you haven't been able to perform at the level you want to is because you do not have the qualification. And very, very likely, you've completed only some aspects of a real system, and as a result, you do not have the things accessible to you to make confident choices that are actually going to grow your capital. And you still exist and believe that the stair steps that lead you to trading are infinitely easier than anything else because you're aware that a few clicks of the button can make you a ton of money, right? All of that is complete bullshit. Now, it is completely true that through clicking, literally, like here's markets that I've been watching, through a few clicks, here's gold. This is XAU USD, gold, ZAO USD, whatever you want to call it. Through literally a few clicks over the last few months, I've returned 10% on my account simply on this trade alone. That was through a few clicks and a few entries on a keyboard. That's what led to an insane reward and gain on my account. And that's true for anything that I've traded. A few clicks on this thing has led to a loss and now a currently sitting runner that might run or might not run, right? These are all created by clicks. But the clicks are not what's leading to the huge monetary gain. The thing that's leading to this huge monetary gain, or the ability to create a huge monetary gain, for myself and for the members I've worked with that have had $80,000 days or $28,000 days, I'll actually take 1 second here to literally go over one of our members. Actually, I think I can find it right here. Yeah, so one of our members, quite literally, just on one stock, on one asset, on one time frame, using the exact same material taught throughout the portal over and over and over again, used that material to get involved on something that was strong, that was looking good, that added up to being a good trade after having done this exact qualification thing. And again, I'm using his example because it's very recent. This was on the 9th, which was about 8 days ago. On just this trade alone, did around $28,000 for himself on his P&L, right? Verified through Real Broker. He did this through Webull. So, this was through a real broker. That's all that matters. It doesn't necessarily matter, but I want you to understand that huge reward and the potential for huge reward and the potential to do it consistently is there. But if you think that this mountain is climbable through a few simple steps, or that it's very easy to the point where you just walk up nice and slowly, and that's going to lead to potentially huge gains, you're gravely mistaken. You are not going to be the person that takes $100 and turns it into $10,000. You're not going to be the person that takes $1,000 and turns it into $10,000 or $100,000. A lot of that is in the bottom tier of the 0.0001%, right? And the way that I've always operated, and the way that I even teach my team to think is, if you are betting on a 0.0001% chance or a 0.01% chance, then you are better off not becoming a trader. You're better off, kind of like literally taking a lottery ticket, playing the lottery, or doing anything else with your life, right? Because if you are basing your potential success on something that has a success rate of around 0.01%, the very, very likelihood, 1 in 10,000 cases, 1 in 10,000 versions of you, will be the only one that succeeds. And you're not, and as crazy as it might be to hear this, you are not that 1 in 10,000. You're just not, right? I'm not, no one is, right? And even if it works, it almost always fails in the long run. So the way that I've always thought about this is you can skip the qualification and be that 1 in 10,000 that maybe gets away with it, right? If you look at the views on this video, let's say it's 5,000 views. That means quite literally half of a person of this video will find true success through believing that the market is as simply as a few steps higher towards this immense reward that's accessible, right? It's the same thing that if you had a buddy come up to you and said, hey brother, like, what's your name? Who the person watches, maybe your name is Jacob. Hello, Jacob. The person, if you're watching and your name's Jacob, then okay, great, right? Hi, Jacob. You know, I'm your buddy, right? Jacob, you won't believe what I figured out, Jacob. If I become a surgeon, dude, I can simply make around 400K a year. Really? Yeah, bro. I think I'm gonna go and just literally go to the hospital tomorrow and just ask him to be a surgeon. Well, bro, I mean, that's not gonna work. Jacob, you don't understand. It's literally a free money hack. I can, you know, I don't even have to put money in. I can spend like $100 on like the CV and resume and all that stuff, and I can make all this money. Jacob, that's not how it works. They're not, nah, shut the fuck up. I got this. They walk into the office the next day and they say, get the fuck out of here, right? The problem is there's no office to walk into in trading, right? If you come into trading with the same belief, hey, Jacob, you're not going to believe what I figured out. I can take $100. I can turn it into 400K per year, but you know, over time I can make it into 10K, 20K, 30K just through trading. And I can just put it into Euro US dollar. I can just put it into GameStop. I can just put it into this asset, into NQ, and make money. Well, no. Listen, man, you don't understand. Listen, you don't understand. No, Jacob, this will work. You must try. Brother, there's a step. There's multiple steps. No, there isn't. The broker lets me open it for free. And they lose all their money. Oh, it's a scam, you know, 90% fail. It's complete bullshit. Well, you went into a place believing there's no qualification whatsoever, right? So no shit, you're gonna fail because you believe that this immense reward and opportunity that's available to people that have actually put the work in is available to you because you just have a brokerage account or funded account, right? It's complete fucking nonsense. So you need to recognize right now, much earlier than later, that there are a ton of qualifications, just like there are qualifications associated with being a surgeon, as there are qualifications associated with being a trader, right? And the earlier you accept that, the much faster you'll make money in trading. And those qualifications, at least from my personal opinion, based on what I've done for myself and what I've done with other people and what I've done with over 10,000 plus people, is that anyone that has a system and starts to test live or to trade live fails. 90% failure rate. Anyone that has a system or 40% of a system has some proper risk, doesn't case study, doesn't collect data, starts backtesting, starts failing and doesn't know why they're going wrong. I don't get how to actually figure out what's going on in the market. Why can't I figure it out? Okay, well, there's steps. You skipped aspects of the qualification. One of the things I do within the MentorFX portal, so the MentorFX portal, actually, maybe I can do it this way. Just to make this very, very clear. So the MentorFX portal, here it is. This is accessible to every single member of MentorFX, okay? The MentorFX portal has very, very clear step-by-step instruction from very beginning to setting up everything to simple to the extreme high end of understanding, all rooted within this exact thing right here. Made free for you guys on this channel, so you can literally write this down and focus on these steps for yourself. And if you need a minimum, the minimum will be 100 trades minimum for each one of these. That's all you need right now to get much better as a trader. I swear, if you just take this down, you will do more for yourself than any video is ever gonna do for you on system or crazy system approach or anything like that, right? If you just simply write these down and focus on these alone, you're gonna do better for yourself in this market than all your friends around you, than all the people thinking that you can do $100 into 10K or whatever the fuck, you know, this nonsense approach is. Just write these down, right? And again, if you skip any aspect of these right here, then you are skipping aspects of the qualifications that lead to success. And when you skip the qualification steps that lead to success, what happens? You do not get the job. You do not get the monetary reward. You do not get the reward to start with, right? Your belief of where you could be or could achieve is basically the blockade to your potential ability to actually make money, right? If that guy, if he calls you, hey, Jacob, I think I can be a surgeon. There's a few easy steps I must take. It's like, well, yeah, the steps are easy, right? There are a few steps. There's like 5 steps. There's, step 1, step 2, step 3, step 4, step 5. Those steps take time. A lot of these take an unbelievable amount of time, and they have steep curves of knowledge and implementation required, right? So the knowledge and execution required at each step. So each time has knowledge and execution, knowledge and execution, knowledge and execution, and each step has time, until you reach the pinnacle, which is, I'm a surgeon, and I can now be rewarded for it, right? Those things all exist. And the exact same thing exists in trading. Don't think that because you found trading or have heard about trading or someone told you about trading that you have found the truth to success that is amazing. You haven't. You've simply found another way to be an entrepreneur with different qualifications that you must abide by, that you must move through, or you are gambling on being 1 in 10,000 of lucky hitters, or 1 in 100,000. And I don't think basing your entire life on this is worth it. Okay? If right now I put a button in front of you that said, when you press this button, you will either be broke 9,999 times out of 10,000, or if you press this button, there's a 1 in 10,000 chance that you make $2 million right now. What are you doing with the button? If your answer right now was to press the button, okay, you should not be trading. You are mistaking what trading is actually offering you and what it requires to be a trader. Because most of trading is nothing new in regards to application of material, time, process, and qualification. If you cannot recognize that, then you are guaranteed to fail, right? If that button is something that you would press, then you are approaching trading from the wrong perspective, right? Similarly, if I want to ask you this, right? If I told you this is the same button and you can put in $10 and 1 in 10,000 times that $10 will become $100 or 1K, right? And then 9,999 times you lose it. I don't know if the mathematics works out there. Would you do it? And if the answer is yes, then again, you are completely mistaking what trading is offering you. You are mistaking what the actual process through trading, or to get into the top of this mountain, or to getting to this point that you believe, is crazy and this insane reward that's available. You are mistaking yourself over how to do it. And as a result, you shouldn't be in the space. Or if you recognize that none of that works and there's a few steps, then these are the steps that you want to follow. This is the best steps I've ever seen, and this has worked through over 10,000 people that I've worked with directly, right? The people that have done this are the ones that also have had their $28,000 P&L days, $60,000 P&L days, $140,000 P&L dollar days, right? And the people that haven't done this are the same people that have gone through immense losses, right? Have done through 50K losses and 50K debt and stuff like that, right? I want you to understand that. Like, I'm not just talking about this like, well, you'll make $5 million if you just follow the steps. It's not the case. But you will get yourself to a point where you have a system that is profitable under your belt if you follow the steps. And these are the steps. And if you skip them, you lose. So the steps, as I teach them in the entire portal of our team, is these right here. This is nothing new, nothing special. I'm not even hiding it from you. Recognize this. Learn a system at 100% of its understanding. Not something that's like, oh, every single day I draw a high, I draw a low, and I hope that when price takes out the low, it might take out the high, or takes out the high, it might take out the low. And that, I'm not talking about 20% understanding of a system, right? Just because you know words or cool ways to label things on a chart does not make you an understander of the system, right? One of the ways that I teach my team to think is I quite literally start everything at a basic understanding of how price functions, and that gets built on through understanding of trend, when trend is actually applicable, good or bad, how stages function, how structure as a result functions as a part of that. Basically, every single step is quite literally to build upon an understanding of how systems operate, when systems are worth taking, what is a good system, how to actually label it by the end, so that by the time you get to the bottom of just and only the system aspect, you go, okay, I didn't need any crazy buzzwords or crazy understandings. All I needed to do was have an understanding of how markets can deliver. That is what a 100% of a system is. 100% of a system is not going, I know that price has support resistance, and therefore I can be profitable off support resistance. It's like you have 20% of the system worked out. I know price has structure, and then when it breaks down at a big FVG or whatever, right, that means that I can be a seller here. It's like, you're not special for understanding this, right? This is a basic system that you can learn in 5 minutes, and that's still 20% of a system because you have no realistic understanding that you can now have confidence in, that you can have pure confidence in, right? But let's say you get to a point where you have 100% of a system worked out. You go, okay, I know or understand the fundamentals of why the system works, what the system kind of entails, the fact that it works across multiple assets or multiple timeframes, no matter which timeframes I choose. And now I can move on to understanding how that system works within proper risk. What does it mean to take losses? What does it mean to be a winning trader in regards to losses? What does it mean to think in terms of RR instead of monetary value? What does it mean to understand that? Because I know this is leading to what real monetary reward is going to look like in my trading. Okay. How do I then take those things and apply them? Well, the next step would be case studying. How can I now take all the things I understand fully about a system and about proper risk and look at something and say, oh, these are the things that could be accessible. These are things that might be accessible for me as a trader, right? That is a case study element. Then there's the data collection, which just says, how did the things I did and the rules that led to them lead to an overall understanding of losses and wins that make up a system? Okay, so to give you even more value, if I can possibly offer it, one of the things we did within the MentorFX portal, so I actually did this step by step. In the portal, you'll see how we use our own data sheet to record proper data. And by the end of it, this is where we found ourselves. This was where we got ourselves here, and you can see here, a win rate that's less than 50%, a loss rate that is relatively high, a break-even rate that's really clean, and yet there's pure money being created out of it. There's pure R coming out of it. This is because we've applied a step-by-step approach. We know what is leading to the profitability. The case studies are leading to proper data. The data is leading to backtest. The backtest is leading to forward. And then by that point, you're able to actually execute this thing live. Now, again, this is not me telling you to go execute live. I am not a financial advisor of any sort. Everything I say is speculative, is based on my own personal opinion, and based on my own personal experience, right? So don't just hear this and go, oh, I'm gonna go live, right? Simply apply what you're hearing or apply it in regards to what you've done and see if it brings a more positive result than the shit you've done before. Because I guarantee you, a video about me talking to you right now about proper steps and qualifications in trading is going to do a lot more for you than a book, a random book on just psychology. Is going to do a lot more for you than a random video or a new video on the next big indicator or the next altcoin, the next crypto, the next special approach, the next break of character, structure, reset, blah, blah, blah. It doesn't matter, right? Those things are not going to do anything for you if you don't know how to implement them. This video is about implementation, okay? So if you have a system and you allow yourself to learn a system, and I don't care if you learn from me, if you join my team and learn from myself or learn from anyone else, it doesn't matter. There's plenty of amazing systems out there. You just need to have an understanding of that system, okay? If you have a system, a proper risk understanding of applying to that system, the case study, which simply means looking at markets in regards to the principles of the system and risk to understand where opportunities could take place, then to applying that to data collection where you actually get losses, the most important factor of trading, where you learn to see how losses make you a fuck ton of money, okay? The only reason this curve here goes up is not because of the wins. Just so you guys understand, well, it kind of is. The only reason this curve goes up is because this curve is created through the execution that leads to losses, which leads to the steps that actually create wins. Okay, so it's like a weird way to think, but you start to realize the real cycle of trading is to take a trade for the purpose of a loss to make it into a break even or a win for that to fuel your account. And this cycle is the one that actually makes you money. The thing that makes you money is not studying your losses and knowing where your losses were so you can fix your losses. That's not what makes you money. What makes you money is a true understanding of the principles and qualification that lead to wins. right? Which is that losses are a huge aspect of what you do. And then you apply that to backtests where you now accept your losses, enjoy your losses because they create the wins, and that leads to you being able to execute live to the point where by the time you're fully executing and doing this on repeat, you have the ability to sit out, to do nothing, to take trades, to take losses, and to inevitably, because it's guaranteed if you follow the qualifications, because you've literally done the schooling, the 20 years of schooling, the 8 years of degrees, the 8 more years of living with other doctors, the 8 years of interning at doctors, whatever the fuck the things to being a surgeon is, and then becoming a surgeon, nobody questions you. No one's like, but do you have the qualifications? Do you deserve to be a surgeon? There's no such thing. There's no, but are you a trader? Do you deserve? Do you have the qualifications? There's just simply, you've gone through the process and you deserve the qualifications that now lead to where you are. And as a result, right, you get rewarded for it in the version of actually making money and scaling your account. And you start to be able to put the money you have to work, okay? Now, one part psychological of the process where this video kind of started is understanding the kind of environment you're in too, right? If the environment that you're coming into trading from is that of, I have simple steps that I need to take to achieve this insane, ungodly amount of performance, then you're going to blow everything and you're never going to make it, right? Versus if you know the environment is that of, holy shit, I got to do a lot of things before I reach this level of reward or monetary success, then your entire philosophy around doing the work changes, okay? So the reason this all spawned, this idea spawned, the reason that I wanted to talk about this specifically is because I had a member that I'm also working with within my mentorship who just got a brand new job, okay? And his job offers him much bigger pay. Basically, you know, he's doing very well in life, and yet he's still learning to trade, okay? And what he's even mentioned and has already noticed in his own trading is that his own trading, his own understanding of how to go through the process and to create these qualifications has become infinitely easier. And he is starting to see more success and racking up positive equity curve results along the lines of what you'll see. Let me just see if I can find this. And by the way, you guys should join up so you have access to this too. But if I go into the equity curve section of our team, where people just get to post some of their equity curves of their testing, right? Some are going to be, you know, whatever, because people are working. But the more you do this, you know, positive result, insane positive result, ignore this because he's just adding to the data. So his data currently ends him up right here.
Order filled.
Right. Result that led to positive, and he basically got to learn from his own mistakes to get positive curves. So again, you're going to keep seeing this over and over and over again because every single member here, right, has a process that they have to follow, that they have to go through to achieve the actual level of success that, let's say, you have set out to achieve when you decided, you know, I want to get this, right? So the environment that you accept is the one that you start to excel a lot more in. So the guy that I wanted to talk about is a guy that just got promoted at his job or got a better job and is now making a ton of money through the job that he's working, right? And through making a ton of money with the job that he's working, he literally messaged me and said, holy shit, I am seeing more simplicity in this entire approach in all these qualifications. I'm able to execute on them with almost no issue. I'm already seeing profitability in my curves through the curves that I'm doing. And I think it's all to do with the fact that the environment now allows me to do that. So this video is also a big testament to environment too. It's to accept that the environment that you're in is not that of easy steps that lead to big monetary. The environment you're in is one that has many qualifications. And if those qualifications are not met, you're going to be part of the 90% that fail. But because you know that that is the environment you're in, where there are qualifications, then you should set up your life in a way that allows you to learn, get better, while also living a life that you're okay with having. Okay, this is very, very important. So the guy, notice this, the guy that has a job, that has been promoted, that is doing very well for himself in his life, where $100 a month for like our team doesn't matter, where he can take time when he needs it and learn about a system where he can have the time that he properly needs to go through the process where he's not in random debt because he's throwing money randomly at the market and losing it all. The guy who has all of this shit figured out and has a good life is the same one that is rising through the ranks of these qualifications with no issue and very quickly. Which again begs the same question. Do you think the person that is becoming and meeting the qualifications of this surgeon right here, do you think the person meeting those qualifications is the guy that is, you know, completely broke off his ass, is already in debt 100K, 200K, is gambling every single week, which is basically, if you don't know what you're like, if you're a bad trader and you haven't learned to trade, but you're just throwing money at the market, you're a gambler, like one that goes to the casino and loses money, right? Do you think the guy that is doing all that in his life, doesn't have his life worked out, has no means of monetary income, has no house even maybe, has no place to rent, do you think that person has an easier job at going through these qualifications to reach a surgeon level? Or do you think the guy that has multiple things figured out, might be working as a waiter part-time, might be making a ton of money as a waiter part-time, might be working as a data analyst part-time, whatever it might be, making money part-time, lives in a decent place where he's happy, has insurance, has everything that he needs, which one of those do you think has an easier time? If you take a 10,000 plus people like that, 10,000, which one has an easier time becoming a surgeon? Well, it becomes very simple, right? The guy that has absolutely nothing, permanently nothing, in debt, blah, 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 1 in 10,000 will make it. And here, well, the people that have decided they're going to go through the process, what, like 80%, 50%, 60%, unless they want to quit, will make it, right? This is how you have to understand kind of mathematically these big numbers of 90% fail, or 1 in 10,000 can make it, or I can turn my $100 into 10K. The reality is, if you actually want to make it, recognize very early that there is knowledge and execution and time that is associated with getting better at anything, because those things add up to the qualifications that make you a trader. And if you haven't gone through those steps or found those qualifications that are going to now make you a trader, you're guaranteed to fail. You cannot be a trader. You will not be a trader, right? You're better off doing anything else. And if you have decided that you're going to go through them, then at least start with these qualifications right here. Because if you just allow yourself to go through these qualifications, you're going to do infinitely better. Understand the system at 100% of it, not just a random pattern that happens and you can just look for it every day. No, I'm talking about understand what creates the pattern and the steps that lead to the market delivery. Add a proper risk understanding. How do you properly risk on an account, no matter what the account size? Start to case study that system across multiple assets, across multiple markets, every single day, across everything. Collect data on that, back test it, then go live. That's it. This is literally all it takes to get the qualifications, but those qualifications are rooted, as I said a second ago, within these little steps right here. Okay? And recognize early on that the environment you're in is not one of easy, simple steps that give you quick access and glory to this insane amount of money, because it's not how it is. There are big qualifications. There's a lot of time, effort, execution, and knowledge associated with those steps. And if you can allow that environment to be true, then the way you act around your real life and the way that you live your real life, because again, guys, don't be the person that takes the 1 in $10,000 gamble on your real 1 in 10,000 person gamble on your real life. This is the only life you have, right? If you waste it on a 1 in 10,000 chance, then you might make it 1 in 10,000 times, but the rest, 9,999 versions of you, which is very likely the person watching this, will never be a trader, right? So don't go the route that throws the qualifications out the window. Allow yourself to accept qualification, allow yourself to accept environment, and improve infinitely faster than everyone around you. All right, guys, I hope you enjoyed this little episode of Ment Talks. I'll see you all either in the trade talks, where I get to talk with all of you fucking amazing people right here, or I'll see you all in the comments in the YouTube video below and in the next video. All right, thank you all so much. Have a good one.
We finally saw a test of 562 for the SPY, an area that we're paying attention to for rejection to see if we are going to get some big volatility to come in. And there are a lot of things we are seeing in this area that just say this weekend could be a spooky, spooky thing. And so we need to get into that as we get into that technical analysis and check out the futures, which is showing a certain signal in here. Man, we need to be paying attention. So let's get into it. for the time being, I know everyone paying attention to Apple. I know everyone paying attention to Amazon, those things coming down. They have their calls coming out soon and we'll be paying attention to them. But the important part here is just we need to figure out if tomorrow is really going to be affected by this. We're going into a Friday. That means options are expiring. And so if you really wanted a little outlook on, hey, are we going to go to those extremely lower prices, get a test down here towards 510 or possibly even a test of 480 in the month of May, well, then we might want to be paying attention to signals like this one. If you really pull up the futures market, this is the thing that is not giving too much confidence. And if this confirms, it says be very, very cautious holding things over the weekend. Now, this doesn't mean to me it has to be something absolutely awful. These things can work themselves out, but it tells you that there is some risk that if you get some solidified, certainly bad news over the weekend, then you need to be paying attention. And so a piece of news that a lot of people are not paying attention to while everyone's distracted by earnings is this guy right here. Non-farm payrolls and the unemployment rate. These will be very important that they are coming out before market open tomorrow. So let's just be aware of that and look for reactions at this time. And then we're going to go into the SPY on these shorter time frames and talk about those daily expected moves. And just so you know, if you want to join on Patreon, you need a daily expected move for Apple, a daily expected move for Amazon, maybe a daily expected move for Tesla or any of the stocks that we cover on the right side here. We just put out the daily expected moves on Patreon. The link is there in the description if you would like to join. So something we'll notice here is the 30-minute was able to violate some divergence here, still holding the first point way, way back. But for the time being, we could still be in a market where it's Friday and we need to see some crazy things, right? We can see crazy things as volatility potentially increases. People are saying volatility is dramatically increasing, and we'll maybe go over that in a second because that's just not correct. You're at a point where volatility can begin to increase, and then we start to go into that turbulent market. Are you there yet? We'll have to see price action tomorrow. For the time being, the 30-minute did confirm with the price action. It did confirm with the MACD, and it did confirm with the RSI for the time being if you're utilizing that signal line. This tells us that there is risk to go retest into this zone. That's right. All we're really talking about here, if we're not losing this, as far as how we get back up to these levels is, hey, we just broke through, we gapped to the upside, come back down into that zone, and now use that middle line right around 550 to actually turn back up to see higher prices here. So we'll find out if that's going to take place, but that's really the only thing I'm looking for. Right now, the 30 minutes confirmed down, suggesting it could pull back, and then we do have a point to pay attention to with our daily expected moves, right? 551.12 to the downside. We have 565.82 to the upside. Once again, 565 becoming important. So for the time being, how we get to 565, we're going to see what we're getting right now continue. You might see a sell-off early on in the day and see that thing be able to buy back up. And then I would really still be watching out for like holding things over the weekend with the things that we have going on here. It just means, hey, this is a great play, right? We were paying attention to the 2-hour higher low. Okay, now it's time to potentially make a decision with all of that money that you're potentially making. It should be good stuff. So for the time being, if this wanted to break down, and thank you so much for subscribing. Let me just turn that off. Alejandro, thank you so much for being here, and thank you for subscribing. But I'm going to turn that off for the time being. Make sure you're subscribed as well. If this is going to break down, what we need to see is this break through all of this. We really need to see most of this broken. You need that to come down to these type of levels, maybe even come out of that zone, then retest in it, see rejection again, and watch that thing roll over, almost in some kind of, like you would say, head and shoulders. But that's really how you end up down to 535, right around 535. So you're looking for, if this is going to get really bad, you want something surprising then, most likely on this Friday. And that would be, hey, maybe gap below or just see this thing swipe through all of this, maybe catch a bounce down in these areas and use that as resistance, because you can use daily expected moves as resistance in these areas. Now, is this overall like terrible? Is this really, really bad to send us down lower? And the answer to that is, if you're looking at the futures, yes. If you're looking here, then you're saying, okay, we could see this 2-hour dip all the way back down, curl back up and set a trap a little bit higher up. So we'll be paying attention to that, as I don't believe we came up to the gap fill. So we'll be watching for things like this, paying attention to our weekly expected moves. But the main thing that we can get across here is, man, we might be cooked over the weekend if this thing gets some bad news at this exact moment. Now, the Qs, I am expecting some volatility. Once again, confirmation with price action, confirmation with MACD, confirmation with RSI that you're at least seeing a 30-minute pullback. To do what? Well, what did we do around here, right? We dropped out of this zone. We built back in it. We took back that center, and then we bursted to the upside like a front run. It almost looks like a front run for downside here as well. So not necessarily the best thing. But for the time being, if this is just going to be a pullback, okay, we have a daily expected move. We can watch 474.35. We have a second point you can watch, which is even better, I think. Right around, I would, somewhere around that 471.50 type of level. This would be a good area to see if we can catch that support to actually shoot back to the upside, and we'll be paying attention to those things with you live in the morning on YouTube. But just note that the Qs just had two huge companies put out earnings, and they just had two huge companies put out earnings yesterday as well. So this thing is going to potentially be up and down and all around with options expiration. We'll see what happens with it so far, but also taking into consideration that these aren't necessarily the best things to see, right? You want to see more time for a pullback here, more consolidation before getting that move. And that's why I'm really weary about this, right? We're getting these upward moves on some earnings, big announcements, and then those could all just like fade down as people potentially take some profit. And we could at least see these things start to pull back, at least for the Q. So 489.01 to the upside, 474.35 to the downside. Once again, if you're going to see this break to the upside, well, we might come back down into that zone, see some support come in and be able to turn back up and continue on our merry way next week. Maybe still paying attention to risk over the weekend. Seems a little crazy out there for the weekend, right? Just the things that are adding up with the futures are just saying, man, if you're willing to hold over the weekend, you might have some huevos, okay? If we're going to break down from here, you're probably going to have to see something pretty damn ugly to break down completely on Friday, right? We're going to have to maybe break down to these type of areas and see some of these type of things go on to actually roll that and actually break through this low. So those are some things that I'd be paying attention to, some kind of structure over here that tells you, hey, it's likely we're heading down. That's going to be the case there. So we'd have to probably see something surprising, which is very interesting because implied volatility actually came in today or for tomorrow, which is very cool. That means that something surprising can take place. If they get bad calls or anything, and guidance will be huge here, even if they're beating, they need, good guidance. And that's very hard to do for those two companies who are very susceptible to some tariff problems, right? Some tariff issues on the pricing of their products and things like that. So it is going to be an interesting day. There's no way to really say like, oh, there is serious direction to head down tomorrow. There's serious direction to head up. I would say that this seems pretty damn probable at this moment. We gap down, you're able to buy that back up, and then you actually reverse as you retest the high.
Order
that would be
filled.
something to pay attention to. And we'll watch this live in the morning and maybe drop some more of these zones so you guys can pay attention to it. But island reversal is on the table as well if we're able to see a gap really low and then we head down, see that bounce to get retail like, yay, we're all excited. Friday, we're coming back. And then on Monday, you just roll that thing to the downside. So a lot of risk over the weekend. That's the main point to get across here. Hope it's helpful. Apple, just obviously not a good thing. Just squeeze. Uh-oh, you can always fall off. But the big thing here is just where are you rejecting from? It doesn't look that bad from the 2-hour perspective. This can continue, just so you're aware, maybe to get to these price points up here towards 217 to 218. That'd be very good. But if you just reject here and you turn all the way down and you go down to this type of area, well, this is telling you something. This is saying, okay, we're going into that downtrend for a bit of time, and we're probably filling both of those gaps. So just be aware of that. But all of this can change by morning, so we just don't want to go into it, too in depth. I'd rather look at something like Tesla that looks like, hey, it's still kind of looking like it's trying to get this volatile flag. And if that would break to the upside, if you get this to curl up, that would be a good thing. But like I said, you're seeing some risky areas. You're in a risky area where you can see drop, right? So we haven't seen that big drop yet, but it doesn't mean you're really looking great here for the time being. We can see that the daily chart could cross down and everything would be wiped out. So we'll be paying attention to those things. But I think the main thing that can actually help you out is, weirdly enough, the dollar making a comeback here. That's very, very good. So this positivity can continue. I just think we might need to go sideways for a bit, not necessarily for the dollar, but for the market. But the dollar snapping back up is going to be a good thing if that happens. Just note it can snap up, roll down, and then create a base here if it needs to. But we are looking for the dollar. And then volatility. Volatility, a lot of people saying like, oh, extreme volatility is here right now. That's just because of option. That's just because of earnings. You do not have volatility at a higher level. You have it at a lower level. So that means you're at a moment where that can spike up and start to come back into the market. But for the time being, you don't have volatility super high. All right, you're probably looking at this going, hey, when is that going to go super high? And you're looking at the 2 hour and you're going, hey, what do we have down here? We have the confirmation of divergence now on the 2 hour. So we mentioned this during the live show. We were paying attention to the 2 hour if it would make a divergence and confirm that. It confirmed it. It's above the 9. It's not above the 5 yet. This is saying that, you know, volatility can start up tomorrow. It doesn't mean it has to go straight up, but it can. It really can start up tomorrow, at least getting back above this 5, maybe taking back a level of like, I guess you would say like anything above 2650 would be, hey, volatility is coming back in. So for the time being, you do have a 2 hour divergence. What does this like to do? It means that next week you're at serious risk of turning down. Not only is the future saying it for the S&P 500, but you're actually seeing it from volatility, right? You're getting a similar 2 hour signal. You're getting a 4 hour for the SPY this way and the 2 hour for VIX this way, or not the SPY, but the SPX 500. And then you're getting the 2 hour this way, which just tells me this is the opportunity where, like, watch out over the weekend, right? You've heard me say that multiple times. But if the daily crosses up here, something we'll look for is if volatility spikes, maybe for a week or so, and then we see that drop back in. And then at the same time, right? Same time, we want to see the SPY. If that's going to dip down, either it goes down to that low and we see volatility give us that divergence between the two with a lower high compared to the test of the bottom here, or we're going to see both at the same time do the same thing, which is we get a higher low from the SPY, we get a lower high from volatility if this thing turns up. So the main thing I wanted to get across in this video, and why we don't have to talk about things too much, is we need to see the price action of tomorrow and really dictate like, hey, what's happening here? But whatever the price action does tomorrow, I can tell you this, pretty assured, right, with this, there is some big risk of holding things to the, I would say, long side, or even trying to take like shorts or anything like that. I just think in this type of environment right now and where we are at with price, it looks like we are going to see something like this or sideways before we're able to go higher after tomorrow. So tomorrow's price action, we'll look into it, see if it changes. But for the time being, the weekend looks super risky with the things we have going on out there. So just wanted to put that out there, food for thought. I have to take off pretty early today. Again, it's just a busy week for me over here. So I appreciate you guys still joining the live streams and watching these videos. It means a lot. But I just wanted to go over some little things that I was thinking about, mainly talking about how this would continue. This would be, I think, how it would continue. How it would overall stop right now is you keep fooling around up in these areas and then you go through something ugly that then rejects to the downside, and you're going to be at 435 pretty quick, especially with the reversal signals that you are seeing over here, right? If this is able to confirm and it doesn't whip back up and make a new high, right? We see some kind of little lackluster bounce and that just rolls. That's just not going to be a good thing for the SPX 500. It's just not, which means this can roll down on a daily chart, which means this can go test right here or right here in the next couple of weeks. So just be aware of that. Keep your wrist close to your chest, right? Especially for this weekend. If you had a good week, don't ruin it by trying to do something. You don't have to trade every single day. Me, myself, I'll probably be holding out and just waiting to see what happens over the next couple of weeks, because I don't think that the big trade is really here. I mean, this is definitely a trade to be taken by some people, but I think the big trade
Order
be
filled.
actually down here in these type of levels where we could see some de-escalation take place. So thank you guys for watching this video. Really appreciate it. Hope you guys were able to get something helpful from it. If not, hey, come to the live video in the morning and ask some questions. We can talk about price action in the morning and try to figure out which kind of scenario is going to play out over the next few trading sessions. But we do understand that there is risk, and if we do get some bad news over the weekend, we might be cooked. So thank you guys. Have a great day. Peace out.